What's going on YouTube? Hope you guys are having a wonderful day so far today. I'm going to be showing you guys how to do a moving average strategy. It's just a crossover strategy between the 20 and the 10 moving average. This is a really good strategy if you're more of a short-term trader, maybe an options trader, or just a scalper looking for some really small price movements. But it can often catch a really large price movement too. So all you need for this strategy is just a 20 moving average, which I've got here in the green, and a 10 moving average. This is a daily chart, by the way, not weekly, which I've got here in the red. So what you're looking for is whenever this red crosses below the green, that's called a dead cross. Whenever it dead crosses, you want to sell. And then whenever the red crosses above the green, you want to buy, which is called a golden cross, which is just when the 10 moving average crosses above the 20 moving average, which just tells you in the short term that this price is stronger right now than it has been in the last 20 days average. So for example, there's a golden cross here, the red goes above the green, so you're going to buy right here, which is right around the 187 price. And then you're going to want to sell when it dead crosses, which is right here around the 196 price. So that's a good $8 profit-ish right there. And usually what I like to do is just sell it before it even dead crosses, because right here when it's really overextended and you've got this big gap in between the price and the moving average, that kind of just tells you that it's overextended and it's a good time to take your profits. You don't have to, but for example, if you take your profits here, you're at 204, whereas if you wait until it dead crosses, you're already at 196, so you just lost $8 more right there for nothing, just because you got a little greedy and wanted to see if it would go higher. So that's just what I like to do to minimize my risk and take profits while I can. So just for example, you'd buy it right here. There's a big price move right here at about the 189 level. It crosses up. You'd carry it all the way up here. Crosses a little bit below here, but I like to see it cross more strongly. As you can see, it's just like so close right here that that's not even really a cross almost. So I wouldn't sell quite yet there. It's kind of just a shakeout, and then it takes this moving average again on high volume, as you can see down here. So that's a really good sign that your stock is still strong, and then it rides all the way up here. Dead crosses here at about the 207 level, but as I said before, you can see how big the gap here is between the price and the moving averages. So right up here is where you really want to take your profits, around the 220 level, as opposed to waiting a few more days and you're selling it at 206. So you just lost $15 there just because you wanted to get a little more greedy. So it's always better to take it when it's overextended than after it's crossed over already. Hope you guys enjoyed this video and learned a little bit. If you want to have any more video requests for any strategies or indicators, anything like that, let me know in the comments and I'll make a video on them. And have a good day.